Hello and welcome to a very special episode on Smart Money. This is a part of our Outstanding Women in Finance series, and today I have with me someone who perhaps needs no introduction in the market. Amisha Vora of Prabhudas Lilladher is with us. She has completed over 35 years in the financial markets and now has perhaps completed a full circle. Recently she acquired Prabhudas Lilladher and raised her stake in the group all the way to 90% plus. Amisha, thank you so much for joining us on the show, and congratulations on this move.
Thank you so much, and it's always a pleasure when you are in front of us.
How sweet, thank you. You know, it's been a long journey, right? I mean, we have interacted for over 15 years now. What has your biggest learning been in this journey? You've been through the ups, downs, and everything in between. What's your biggest learning?
So I'll tell you, of late, I feel that in the markets and also in the business, perseverance makes all the difference. Earlier, I used to say that there is no shortcut to hard work. Now I say that one needs to add, be it on your investments, be it in your business, perseverance. And I always proudly say that you can beat me in anything, but not in perseverance.
Okay, that's one thing that will stay with me. So tell us a little bit about the rationale behind this move. I mean, what made you take that step to acquire the group? And now what do you see as the vision for the group?
So frankly, this question continued to rattle in my mind quite a lot, because I'm not at that 35-40 age, also where I have a very long time ahead. But I still feel that this will be the best decade for India. And also that this is one of the very well-respected brand. It is a national brand, as you might know, that we are now present across 20 cities with our branches, but almost 2,000 plus franchisee represent us with clients. And from institutional side, of course, as you know, domestically and globally, we are very well covered. So I thought that this is the time when I need to really take this plunge and take it furthermore professional as well as independent. Right now it is ownership and management a bit merged. We were 4 partners looking after the business and also managing the business and owning. My idea is now that ownership is one aspect. Yes, I have consolidated, but here on the management will be further delegated with commensurate returns in terms of whether equity stakes or ESOPs, managing the growth.
Okay. You said that this is perhaps going to be the decade for India, right? How would you corroborate that with some data? Because we are seeing the equity cult come back in a big way now. Retail is back in a big way. We're virtually at all-time highs. Do you see this as a structural up move for the Indian markets?
I definitely feel so. One is, I will say, from the economy perspective, then is of course the savings habit perspective, and both has to go hand in hand in this journey. From economy perspective, I think the COVID, the way it injected and impacted the world and how smartly we navigated without over splurging is standing us apart. We always used to talk about our vision for Atmanirbharta, but now that is being actually seen, be it in defense, which is a big industry, be it in our other infrastructure aspects, including railways, and both these plus our reasonably good finances and China plus one and Europe plus one has kick-started our capital goods industry big time. Now, I think that with steady and strong banks, very good capital goods sector, and the combined vigilant view of our governments, not in terms of, coming back after businessmen for income tax and XYZ, but coming behind industry to support at the right time from any global headwinds. I think that's a sea change which has happened. And as the breadth of the sectors that participate in our growth, we always knew we are the best demographic country in the world. As the breadth of the sectors keep expanding and the opportunities to make money keeps expanding, second side you see, we withstood the entire FII selling onslaught and we are just standing tall.
Absolutely.
And that what has saved up till now to us is the SIP, the financialization habit which has happened. if you take a decade's time, we will be more than doubling our per capita. We will be the third largest economy. Not only that, the number of millionaires and billionaires will just shoot up. So be it wealth industry and be it all industry around it, fundraising, investment banking, M&A, corporate advisory, will all flourish according to me.
And this is also perhaps a great time to be a woman in financial services, right? Because I mean, the name of our series is Outstanding Women in Finance. And earlier on, there were issues like the gender pay gap. It was harder for women to survive in this industry. But now a lot of that dialogue is taking place. How do you feel about it? And what would your advice be to that woman who's watching you right now and perhaps wants to either reach where you are or, you know, follow your footsteps?
See, recently even Mrs. Sitaraman was there in one of the event which was organized about women on board. And some of the statistics, not only in India, but globally, are also not very encouraging, so to say. Only 10 to 11% of the women represent boards, and less than that globally, and less than that in top management, CEO, CXO positions. But I think that it is a start which has happened. And as people, more people like you, who are younger, very well educated, and more people like me who do not hesitate, my, say, daughter-in-law going for an Oxford, that kind of encouragement which is going to get now on, we'll see that in next 10 to 15 years, the scene will completely change. We are in the midst. We have traveled a long distance from where I started my career. You know, despite being a chartered accountant, gold medalist throughout in school and college, my father used to tell me, "Jojaya beta, matlab ki be careful. If your mother-in-law says, then you can work." So that was the mindset. And look at my mindset. Forget that I am professionally always busy, but I tell my daughter-in-law that if you want to be an IAS, try that. If you want to go to Oxford, try that. I'll be the first and last to support you. And I'm sure same you will do.
Absolutely. So the mindset is changing now.
Mindset is changing. It is just a question of time. Then we will forget about, you know, women empowerment. It will be all I say is women entrepreneurship. You
know, the one good thing about the stock market, right, is that gender pay gaps don't work here. The stock market is a level playing field for everyone.
Exactly.
You would agree with that, I'm sure. But do you think this whole gender pay gap issue still exists in 2022? I mean, of course, India is at the lowest ranking, you know, as far as the gender equality is concerned. But how do you feel about that in your peer set?
Particularly in finance sector, I'm sure you know many women who are heading, be it mutual fund, be it debt side of the businesses of any banks, or anywhere they are heading. I don't think the board would have considered that, you know, the CEO is a woman, so we will pay her 30% less, ye to maan jayegi. I don't think it's going to work like that. What rather I feel is that this generation, which is just having a run of almost 20-25 years ahead of them, it's up to them to not give it up in between. They have to show equal sincerity. I don't think that gender gap leading to pay gap exists, be it in research, be it in wealth,
fund management,
sales, funds management. In finance market, I don't think so.
Okay. Well, you know, I want to talk a little more about your investment style, because this is a market where it's become very hard to catch on to larger trends. Before you know it, trends are changing. You know, for 6 months, defense is doing well. For 6 months, PSU banks are doing well. How do you know what is the next sector, the big sector that will boom? What is your own style?
See, from investment perspective, yes, there are certain things which come and fade, they go away. But more important is, it has to be for a sustainable time. 3 to 5 years is the time when you can really unlock some wealth. Otherwise, you are trading. So for that, I think the golden principles which have worked over the cycles, and I think which still remain very true, is to identify businesses, or rather managements, in a combination where you see the potential of A, profit growth. So your market cap grows in line with profit growth, but where there is a possibility of re-rating. So there are businesses which go into an inflection cycle. For example, Gujarat Fluorochem. They were doing business, they were in the business for so long. As they started allocating capital to, say, specialty chemicals, which was leading to much higher ROE, much higher margins. So as the structure of the business changed to profit growth with enough free cash generation, operating free cash generation and ROE, the stock hugely re-rates. So the whole effort is to find out where there is profit growth and re-rating possibilities, then the combination becomes very deadly.
Okay, that's very interesting. So what I'm going to do is I'm going to take a short commercial break. On the other side of the break, we'll resume our conversation with Amisha Vora as part of our Outstanding Women in Finance series. Don't go anywhere. Welcome back. You're still tuned into Smart Money on CNBC TV 18. We are in conversation with Amisha Vora of Prabhudas Lilladher Group, which she recently acquired. So that's the big news headline. But we're also talking to her about her investment style, and she is our Outstanding Woman in Finance for this series. Amisha, before the break, you were telling us about your investment style, how you like to identify companies that are on a growth path, but also at an inflection point. What else? Where do you see the alpha generation? Because you do believe that this is a decade that belongs to India, belongs to investors. How do I generate alpha for my portfolio?
So which are the sectors which will be leading in that alpha generation? So I think that I still believe, particularly defense, there is a sea change in terms of national policy which has happened. But beyond that, they've got a time of almost 4 to 5 years to implement it. So what has really happened is they have a negative list of items which they cannot import. They also have given competitive bidding and level playing field to private and public, and they want to strategically develop the entire vendor industry behind that. So there are a few listed plays, I agree, but I feel that from this field a lot of current plays, public or PSU or private, which will continuously get very good orders. Right now our industry is just about 90,000 crores domestically. We feel in 5 years it will become 5 lakh crore. That's the size of growth that we are seeing in defense, yes.
Wow. But these are stocks that have rallied a whole lot. So
Correct.
You think
the
that
stocks have really rallied, but if you see, some of them are with almost no debt kind of a balance sheet, are still around 15 to 20 times multiples. They're not so high. But as the industry keeps growing, the visibility of growth, here the payment system is also very structured. It's not that in infra we went, as a country, as companies, we went into trouble because the payment structures were not very clear. And over and above that, a lot of things got involved in terms of right of way and so on. But here, once the order is given, I think the visibility of implementation is also high. And there are certain private sector players also, for example, Bharat Forge, who are having their own businesses, but they've done so much deep work over almost a decade that they are ready, and now I guess that the order book will start. But this is one of the aspects which is very capital goods industry. I wouldn't say that's the CAGR or compounding kind of a story, but it is a good sector. Compounding stories, we feel that QSR segment, quick service restaurants, we have
like the
penetrated.
Jubilant Foods of the world.
Yes. And now there are many plays available like
Devyani.
Westlife. And as the penetration keeps growing up, our habits are changing, and I think this segment will continuously do very, very well.
Since you're talking about consumption segments, it's been such a big downfall of these platform companies, right? Whether it's a Nykaa, Paytm, something like a delivery. What's gone wrong here? And from an investor standpoint, what does one do?
See, I think one needs to understand two things. As what I always say, that the stock prices have two aspects. One is fundamental, second is valuation. Some of these businesses were, when they got listed, also were similar. What happened is US interest rates were almost near to 0 or 0.5%. So when you discount the future cash flow, we used to discount for next 10 years, 15 years at 0.5%. Now we discount it at 4%. So the whole value comes down substantially. That is part one. Part two is that we assumed, markets, investors were made to assume that the easy liquidity scenario is here to last, but it never lasts. So which means that you keep grabbing market share, we will keep funding you. Now that funding is out of the way, so that they have to stop their market share chase game a bit and start focusing on profitability to sustain. So when both these factors have come to play, I think the valuations are reflecting these. The underlying businesses, were they fraud? No. Were they putting in genuine efforts? Yes. Will they sometimes succeed? Most likely yes. Unless the competitive pressures somewhere change over a period of next 5 years. But some of them have made dominant positions, but they need that breathing time to now
to
be
return to
viewed.
profitability.
Yes.
Yeah, because there has been a lot of cash burn for these companies.
Absolutely. And that was what investors wanted them to do. Grab market share, we are here to support you. Now they don't have liquidity, those investors, so these people are changing their strategies.
Okay. But as an investor, would you touch any of these stocks?
Of course, while they were listing, we kept on saying that we will get better opportunities. I would still say that this is not the bottom. Maybe price-wise, if it is bottom, it might take little more time sideways before they start showing those stronger signs of surviving this particular onslaught which is globally happening of a complete, you can say, stop on fresh capital. So how are they really adjusting their business models and strategies? One really needs to watch. But there are a few very good plays. For example, Policybazaar. I would somewhere think that they are close to making it first in the race. In terms of their business model, they are very well entrenched and they are a necessity. So also, no doubt, Zomato, they are necessity. But I would think that in the race, probably Policybazaar will
be the one to stand tall amongst the others.
Faster.
Okay, that's on Policybazaar. Any other themes before we wind up this stock market discussion? Any other themes that you like? You spoke about defense, you spoke about QSR. Any themes that could sort of balloon over the next 1 to 2 years?
So I think that see, some of the stocks have really done well. For example, hotel industry also has done really well, be it Indian Hotel, Lemon Tree. But we have entered a phase where next 3 to 5 years, the supply of hotel rooms is very limited. The habit of experience, spending on experience has improved substantially. Also, the business will continue to flock to India from all the corners of the world. So here you're seeing limited supplies. So I see rising trend in room occupancy, rising trend in room revenue, and rising trend in the non-room revenues also. So with these combinations, and most of them have adopted very capital-light model of giving their brands and management, I think this sector will continuously do well, even for next 2 to 3 years.
Okay, yes, the way we are all consuming, the way we are paying for experiences, right?
Yeah.
I mean, it's no surprise that these sectors will do well. Okay, tell us a little bit about your own personal experiences. Since you have been in the market for over 35 years now, who has your biggest mentor been? What is your, the mistake perhaps you may want others to avoid? Let's start with your mentor. Who's your mentor in the market?
So I would say that I was very lucky. As you know, I started my career in research and then moved on for institutional sales. Now, of course, I manage the full business. So I had opportunity to meet the best of the minds and fund managers. Somebody who comes at the top of my mind is Morgan Stanley's fund manager, Mr. Vinod Sethi. Earlier days, he used to manage the entire India investments of Morgan Stanley. And the early, I would say, investor into HDFC Bank, And in all those discussions, from an outsider perspective, how they view the Indian markets, the larger opportunity, how to see the larger opportunity that this housing finance is so nascent as compared to X, Y, Z countries, that there is nothing but growth here and a sustainable growth. Policies are so good. So that outside in perspective and a broader view, I think the first which I used to learn is from Mr. Vinod Sethi. But also as I moved on and I used to meet a lot of corporates, many have impressed me a lot, but in the earlier days, someone who has really impressed me is Mr. Dadi Sheth from Levers.
Okay.
I believe that many good CEOs I've seen, but somebody who has a fantastic blend of strategy, micro and numbers was him. And that was seen the way he really took Levers those days to places and changed the whole presence of Levers in India with all the mergers and all that. So like that, I think both from corporate side and also from the funds management side, there are many who have really impressed me, and I keep learning. Every meeting for the management I go, of course I'm learning about their business and what will happen to their stocks, but I also get a lot of management lessons as to what's really working for making this organization so solid. And of course my all-time favorite continues to remain Mr. Deepak Parekh, because I think Deepak Parekh has been one who has created his brand equity much beyond even HDFC's brand equity, which is one of the most respected brand, I would say, globally, but his brand equity stays taller than that. So that is something which one is always in awe of.
Wow, you are blessed to be in the presence of such greats, right? Such legends.
Exactly.
All right, if you had to tell us about one mistake that you made in your career, either in your investments or in your corporate career, that you would want to avoid, you would have loved to avoid.
Sure. I think that 2003 to 2008 was a phase when India's infrastructure regime was changing, and we were going into PPP and so on and so forth. I don't think only me, but all of us as corporates, banks, country, policymakers and investors, we made a mistake in terms of really understanding the on-ground challenges which infrastructure implementation in India can have, and which can just derail the whole cycle, resulting into complete loss of investments. And I think in that what also contributed is that these businesses that we realized early on, after a 2 years growth story, we realized that these businesses are finally not generating cash. Their cash is still getting stuck. So we got off that. But I think even to get carried away with a growth which does not generate cash is a mistake which we did, and I would always refrain from that going forward.
Okay, so never buy companies which are growing but not generating cash. All right, Amisha, we have run out of time but not out of questions. It was really a pleasure speaking to you, and all the best. Hope you hit newer pivots of success and path the way for all the ladies who are watching you. I mean, all the younger generation who's watching you and wants to perhaps follow your footsteps. Thanks a lot for joining in.
Thank you so much.
Okay, with that, it's curtains down on another episode of Smart Money. Keep writing to us. We love getting feedback from you. Till then, stay safe.